Hi there, a very good morning and good afternoon to all of you, depending on wherever you're hearing me, and a good evening to you in US and Canada. Hope you all are doing well. I apologize for being late on the online show on this Sunday afternoon. Was just busy with some work at home. So today I'm going to talk about a couple of sectors that I feel are looking attractive and becoming attractive every day as the stocks fall in those sectors. One that has a couple of larger stocks, and a second in which a lot of ancillary companies are there. So we'll talk about that in a while, and I'll talk about the markets as well and answer your queries. Hi there, hi Venkat, hi Bharat. Hope you are doing well, Nagraju. Hello. Hope everything is fine. Especially, I would say that at these times in which the markets are not doing anything, and probably our portfolios are going down every day, it's better to just little bit stay away from the market and enjoy whatever is coming on TV, or enjoy any sort of stuff that you really like. For example, I'm really into sports, so really it's a plethora of sporting events that are going on currently. The French Open has just ended about a week back. We have the Wimbledon coming up. Plus, currently we have the England New Zealand series in England. Uh, Very interesting test match going on. The first test was pretty good as well. Uh, India playing well in hockey and soccer. I saw yesterday that finally we came through against Afghanistan. I mean, FIFA Giant would have liked it. It's a good channel that he's also having. And we are now going to take on Hong Kong. We have qualified, virtually qualified for the Asia Cup that will be next year. So that's a pretty positive sign. The hockey team did extremely well against a full strength Belgium. It was the repeat of the Olympic semi-final that we saw in Tokyo, and this time around, India went on to win on the final penalty shootout, which was pretty good. They were down 1-3 and eventually leveled things up 3-all, and then won on the shootout. So pretty good. We have the second leg of matches today. The women did well as well, although they lost by 2 goals to 1, but they did well against Belgium. Remember that the both the teams, women and men, are coming back after a 2 months break, and especially they didn't participate fully in the Asia Cup because there was a young team that participated. So a lot of stuff going on. India taking on South Africa in the third T20, which would be, I think, the second T20, which would be today. We have the Pakistan series also against the West Indies going on. We have the Sri Lanka Australia series going on. We have the Zimbabwe Afghanistan series going on. So anybody who is into sports and different types of sports would be loving every minute of it. So I'm spending my time doing that. My portfolio is set. Whatever my portfolio was last month, it's exactly the same. I'm not doing anything with that. There's nothing really that one can do if you are down in stocks which could perform extremely well. I have discussed that. I've discussed that in detail in the Thursday live session. So you might just go back. You might just go back and probably have a look at that as well. In terms of the market, well, as expected, it's going down, and we are seeing that high inflation beat 40-year, you can say, high in the US, and so it's down. The markets are down. Indian markets are set to go down further. So it's giving me more conviction that we are going to break 15,700, and we are going to break it big time, and we are going to go down 1,000 points. That doesn't mean that in a year's time from now that we are not going to make money. I think the reversal will take place from, at least, if not now, then probably by September, October, things would be much better, because a lot of negatives would be priced in at around 14,800, 14,500. So that's the call. So yes, IPL. So the IPL, you can say the broadcasting rights go on sale from today. So that would be interesting to see who gets the rights. Uh, I just have a feeling that if Star Sports doesn't get it, then Star might end up looking for broadcasting rights of the West Indies, which Fan Code has, or Bangladesh, which again Fan Code has. So I would prefer anybody else taking that those rights. So there are a lot of things going on at the moment uh, in the world of sports. So we'll see how things go about the ICC. ICC rights for the next 4 years or 8 years are going to be on the so on sale. So it's going to be interesting. Looking forward to the summer, the Commonwealth Games, and many other sporting events. That's what I look forward to, and probably from October onwards, we'll look at the market extremely closely as to what needs to be done. Uh, so that's the call. But there are a couple of sectors where selling is appreciable. There are a couple of sectors where things have been bad for many years. At least one of those sectors have seen uh, a fall and only a fall, a little bit of recovery, and then another fall because of one reason or the other. I'm talking of the auto sector. I believe from 2017, that's FY17 onward, there has been a continuous slide in all the auto stocks. I'm not talking of the just the Bajaj autos or Eicher or the Marutis of the world. Maruti did well, did decently well even in the last 6 months. But I'm talking on the overall sector basis. The sector has done nothing, and I believe that now, from now till October, is a very good time to accumulate stocks. I'm going to talk about stocks as well. Again, these are not recommendations, just for educational purposes. You can go ahead and check charts and their fundamentals. But there are companies where the valuations are becoming much better from a 3 to 4 year point of view. So if somebody who wants to accumulate can accumulate over the next 4 to 6 months, gradually get into these stocks and hold for the next 2 to 3 years, and probably make very good money. I mean, very good returns, closer to 60, 70%, even 100% over a 3 year period. That's a double over 3 years. So there are stocks in there. So if I look at in the pure auto plays, I still feel something like Tata Motors, if you can find that about 5-10% lower, can do extremely well over a 3 year period with the kind of passenger vehicle sales they are having. Once so you have to understand, the caveat is that the raw material cost as well as the cost for the semiconductor, etc., the semiconductor crunch goes away over the next 6 months, which I believe it should by FY24. It should. So in the next 6 months, by December or so, things will be much better. So in my opinion, there are stocks like Tata Motors, TVS Motors that one can look at. There are stocks like in the auto ancillary space, you have Jamna Auto, you have Endurance Tech, which look very good. Even something like JNA Excel, although it has not come out with very decent numbers for 2-3 quarters, if you get it 10-15% lower, you can start accumulating JNA Excel as well. So there are auto ancillaries. Motherson Sumi is of course a top pick in here, but in the case of Motherson Sumi, the problem is that their major business comes from UK and Europe, and UK and Europe is struggling, and it has been struggling for quite a while. Whereas other companies that I have talked about, their business do come from Europe, but their other businesses are also in India. Means a decent chunk is in India and in the US as well. So Bharat Forge is also something to look at. But not that you just go ahead and buy tomorrow and you'll make a good amount of money. You have to probably divide your investment over the next 4 months. At least till October, I don't see any big move in this sector as well as in many sectors. So I don't see the market going really big time up till October. Yes, July could be good. If June is bad, if June ends up very bad, then July we could see a bounce of around 5-7% on the index, especially on the small and mid cap index. But after that, I think there will be another round of selling in August, September, and then from then the festive season, things will look up. So you have to divide your investments in a way so that you are able to invest in the next 3-4 months on any downturn. So that's one of the sectors. The second sector that I find now much better and people are becoming extremely negative on it is the paint sector. Now, yes, I agree that there is heavy competition. Yes, I agree Grasim, JSW, etc. have increased their capacities big time. So that means that they believe that the company might sell a lot of their products compared to an Asian Paints or a Berger. But it's not done yet. It's not that these companies will do extremely well and Berger and Asian Paints will not do well. You look at it in a different manner. Why have these companies come up with capacities for paint? It is because there is a huge demand of the same. Now, I recently had paint done at my home, in a few rooms, and there was nothing else but the major brand, but the leading brand that I looked for. I agree that with new, you can say, players coming in, of course, when Asian Paints was selling, say, 8 out of 10, you can say, buckets of paints were being sold, it was Asian Paints. Now it will become 5 or 6 out of 10. But the volumes will increase. So at ahead, I mean, 2 years back, there used to be, or before the pandemic, there could be, used to be 1 lakh or 100,000 buckets sold, say, every day, or you can say every month. Let's, for example, 100,000 every month. It must have gone up at least double of that for other players to get in. Because if the volumes had not increased, or if the demand has not increased, there's no point of more players getting into that sort of a sector. So in my opinion, there will be situations where competitions will stiffen up. I agree with that on the short term. But over the next 3 to 5 years, this is the sector to really look at, because the valuations have become very attractive from a 4 or 5 year point of view. Manoj, thanks for your contribution. Your view on Raj Ratan Global. I think this is Raj Ratan Global Wire. That's what you are saying. Tire bead wire company. So I'm positive on it, but I would prefer that you look at larger companies at this point of time in this kind of a economic environment, rather than very small cap companies, unless you are dead sure about that company. So yes, I know about what they do and their numbers, etc., and probably they will do well as other, you can say, auto ancillaries would do well. But I would still prefer, if you have not done your thorough research on this particular stock, look at companies which are greater than 8 10,000 crores, 8,000 crore, 10,000 crore market cap. That would fetch you much better, safer returns in this sort of an environment where the selling could be appreciable over the next 6 months. Yes, I agree. A bottom could be made over the next 3 months, but for the next 3 4 months also, there won't be a V-shaped recovery. So I don't see a V-shaped recovery in this market. But by end of, or by middle of 2023, by July of 2023, things would be much better. It doesn't mean that we'll find a bottom on one particular day and the market will just reverse and make you money. And that is why I'm not in favor of buying into micro or small cap companies. So that's the only call. So in the paint sector, I believe that competition will stiffen up, and competition is stifling up only because there is a greater demand. So the pie is increasing. That's my call. And especially if the monsoon is relatively fine, although it looks like that the monsoon might be subdued. If the monsoon is relatively fine, I think the paint sector, in the even in the rural and semi-urban areas, will do well. So something like Asian Paints and Berger, with the kind of fall that they have seen, look good. And a disclaimer, Asian Paints is in my long-term portfolio of 15 20 years, which I may look to accumulate even more at these levels. But I don't have the funds at the moment. I'm fully invested, but once I have some, I'll definitely like to buy some. So I think Asian Paints around 2400, 2450, very good levels to get in if you get it there. Berger Paints 10%, 15% lower from current levels. Very interesting levels to accumulate, again from a 3 to 5 year point of view, not from a 6 months point of view. Because once the market have an idea that the inflation peaks out, once the market has an idea that okay, interest rate is going to peak out, even if it stays there, even if interest rate stays at 6% and we know that it's not going to increase, I think the market will move forward and will look at situations where there could be chances that the interest rates might go down over the next 6 to 9 months. So in that regard, that's where probably a relative short-term bottom will be made. In fact, a long-term bottom will be made, and then a strong rally, and then after that, probably you will have a situation where the market may go into consolidation or a little bit of decline. Having said that, in that second round of decline, there could be a situation where these companies, the paint companies, the auto companies, might not fall, because the worst for these companies might be over. So that is why I believe paint and auto ancillaries right now look good. That doesn't mean that they will perform immediately, but from a 4 5 year point of view, 3 to 5 year point of view, they look extremely attractive. All right, so I'm ready to answer your queries for the next 5 7 minutes. Please use the super chat and super sticker feature that will help me grow the channel. That will help you also ask me questions and eke out answers in greater detail. Uh, See, you can accumulate Bajaj Finance at current level. There is a possibility that you could see 5200, 5100 on it in the next 4 months, but there is a possibility you might not see it. So it's better to accumulate, at least put in 20 25% right now and keep 75% for major declines later on. I think Divi's Lab is also good. Dr. Reddy's is also good. So these are top class companies from a 3 to 5 year point of view. Anything less than 3 years, there are chances that you could be in trouble because there are elections in 20 that not many people would tell you. 14,600 on the index, 14,700. I think we are in for a major up move, because that means we will be trading at around 18 times earnings.